Well, hey, everybody. Welcome to our virtual kickoff of Falls Fintech Cohort 2. So excited that you are here with us. The only thing that would make it better is if you were in person, but obviously that cannot happen. 2020 has thrown us all just a crazy hand. Nobody expected all of this stuff, and certainly not for us as Falls Fintech. This is our inaugural year, which really threw us for a loop. But one of our values here at Falls Fintech is determination. We know when the going gets tough, we get tougher. And so that's exactly what we did. We hosted Cohort 1 in the spring, and here we are at fall, or nearly fall, and this is our second cohort. So pleased. Our application pool actually tripled from Cohort 1 to Cohort 2. So we couldn't be more excited about that. And a special shout out for sure to all of our sponsors. We've got some of the best in the industry, from payment networks to fulfillment centers to processors, ecosystem startups, and the like. So we're so very grateful for all of those sponsors who have come to the table, helped us succeed, and stayed with us throughout this whole rough time. So today it's going to be really fun. We're debuting and showcasing our fall cohort, 5 companies that, again, our application pool tripled, and now we are at a place where we had to distill that down to some of the best that are out there. Guys, these startups are absolutely hustling. They're crushing it, and they are solving real-world problems. Falls Fintech is founded by Central Payments and Central Bank of Kansas City. We're a CDFI, a community development financial institution. So anything that's solving problems that are plaguing those surrounding financial literacy, people of modest means, racial divides, anything else. It's not just a trend and hot topics, but this is near and dear to our hearts. This is missionally who we are as an organization. And so we're pleased to showcase those folks to you here today. Something we've done different is we have one position that is held for an entrepreneur in resident. That's somebody that has founded a company before, who's a bit farther along, and knows exactly how to peer mentor other people that have gone, or he's really gone before some of them. And so he's going to be walking alongside these 4 other companies and really helping to develop their products and bring them to market quicker. So it's just an extension of who we are as Falls Fintech. He's our entrepreneur in resident. You'll hear from him last, so stick around. I promise that will be a treat for all of you and what he's working on. But beyond that, we're just super excited to give you a little bit more information. We're going to kick things off with short pitch videos from each of these companies, a little bit of Q&A time. So chat in some questions this afternoon using your chat panel. We'll try to get to those. We won't be answering questions live, but we can certainly get those passed on to the founders. And then, of course, the last slide that you'll see after today's session is simply contact information. You're welcome to send anything through to Falls Fintech, but each founder's contact information, who they are, will be on the last slide. So with that, we're going to jump right into Cedar Credit Builder.
Hello, everyone. My name is Adam Fink, and I'm the CEO and co-founder of Cedar. Cedar is a fintech organization founded to significantly improve access to healthy financial products through a simple and creative way to build credit. Credit impacts some of the most important decisions we make as consumers, like purchasing a car, renting an apartment, or looking for that first home to buy. And those with little to no credit profile may be forced into expensive financing situations that could lead them into a cycle of bad debt. The current options to build credit either have high interest rates or require the use of a secured account. So the question arises, how do you make a consumer-friendly credit builder product that both supports the consumer's objective of building credit and moving to affordable credit products in the future, as well as producing revenue and minimizing loss rates for Cedar? That is where the Cedar Credit Builder comes in. Cedar has built a credit product that does not overextend the consumer or lock up their funds in a secured account. By using transaction and balance data, to create a line of credit that covers bills and subscriptions the consumer already pays. We can help build them the credit that they deserve, all while minimizing risk to both the consumer and Cedar. With 100 plus million US citizens having thin credit profiles or no credit at all, the market opportunity is ripe and ready for picking. Through educational and captivating marketing strategies, we believe that Cedar can capture a significant number of these consumers, which will lead to enhanced revenue accrual through our simple credit builder business model. The credit builder cycle starts with the consumer's account creation, which provides Cedar with consumer bank data. This data is used to create a line of credit to pay the consumer's monthly recurring bills and subscriptions, which will be repaid at the end of each cycle, plus a 5% flat fee. Cedar will report this positive payment and line of credit detail to the credit bureaus, which will improve the customer's credit score. The credit builder cycle repeats monthly for 3 years or until the consumer cancels. The Cedar Credit Builder was developed from the ground up to simplify eligibility, embed credit controls at every point in the credit builder cycle, and maintain a high level of flexibility to dynamically adjust with a changing market and portfolio conditions. There are a number of competitors in the market, but each of them have their drawbacks. Chime and other secured credit card products lock up the consumer's hard-earned funds. Many consumers in our market segment live paycheck to paycheck and may not have that extra $500 to $1,000 available to place in a secured account. Grow Credit, which has a model most similar to Cedar's, misses the mark when it comes to credit limit and commitment term. Experian Boost does a great job at quickly showing improvement at one bureau, but lacks the impact to overall FICO and Vantage scores. The Cedar Credit Builder, on the other hand, significantly is better. It optimizes eligibility by lending against money the consumers already set aside to pay for the subscriptions that they love and the services that they need. It doesn't require any long-term contracts or need to fund a secured account. And it reports to the credit bureaus as a true unsecured line of credit. All of these characteristics give the consumer the best opportunity to show significant credit improvement. Cedar's strategic launch plan includes a transition from beta product to business as usual in just under 5 months. This timeline, along with an opportunity for a bank partnership that utilizes its lending licenses and federal preemption, would allow for Cedar to be profitable in under 6 months. The Cedar team, even with its limited number, is stacked with talent and experience from some of the most successful and forward-thinking organizations. Together, we have all the necessary expertise to maintain a positive trajectory and set up Cedar for long-term success. We thank you for your time today and hope to speak.
Hey, awesome video. I'm here with Adam Fink, CEO and founder of Cedar Credit Builder. What a joy to have you here, straight out of Laverne, Minnesota, local. Super stoked to have you. So Adam, thank you so much. Congratulations for making it into Cohort 2. Pleased that you're here.
It's a pleasure to be here. Thank you for everything.
Yeah. So we watched your pitch video. Great job. Love what you're doing. And, you know, Cedar quickly rose to the top in our mind's eye because it's innovative. Lending, credit building, those are real problems that people are trying to solve. What makes Cedar different, and why should people look to and follow what you're doing?
Yeah, from the start, Cedar really focused on utilizing the best financial tools as possible to build a product that eliminates some of those pain points that credit builders are currently experiencing, whether it be a secured card account, kind of holding those consumers' hard-earned funds and not making them as liquid as they should be. No long-term commitments. A lot of these folks, we just want to get them ready to go into healthy credit products and let them end when they want to end. Maybe they want to bop out for a couple months and come back. We're happy to see them come and go. We just want them to be healthy. And then overall, it's just about, you know, keeping it cheap and utilizing as many credit controls and the new technology as possible to make that happen for them.
Talk about a couple wins that you have had as of late. You're pretty early stage, but man, you've been hustling so far. So what are some wins you've had?
A great win. Our platform is ready to go. Just a little bit of work to do with central payments and the Central Bank of Kansas City. So excited to get the issuing going. But right now we're in the process of designing. That'll be launched at the end of August. So our full design from homepage, landing pages, all the way through our app flow will be completely redesigned and ready for the public to start intaking.
Cool. Yeah. Dude, I'm excited for that. Funding, you've got some pretty secure things in the hopper.
Yep, everything's been great. We've had great experiences with investors. Everybody seems to be very positive about the product and the way that we're coming at the solution.
Yeah.
So anything that any investor I've spoken to has been very interested and ready to chat more. We'll just continue to develop our business strategy, and hopefully once we get everything rolled out, they can see the product a little bit more. We'll get them to pull the trigger.
Yeah, absolutely. Well, look, you know this. We had a couple folks that applied during this cohort that are working on similar-esque products. But man, we're just convinced that what you have specifically, you talked a bit about it in your pitch video, but you have unique features, you've got a unique value proposition and the way that you're going to go about this. So I commend you for the hard work. I know you have a co-founder named George that's your CTO. He's out there really crushing it, building out the platform. But congratulations. Tell us what you are most excited about in the 12 weeks of Falls Fintech.
Being able to gain the expertise from the payments team at Central Payments and Falls Fintech is going to be fantastic. Just working on the issuing piece and getting our digital cards into the hands and phones of our users is going to be phenomenal. We're just excited to get that running so we can get the actual full product out into their hands and really start using it and learning and growing from it.
Man. So cool. Thank you for what you do. Thank you for your hard work. Can't wait to see where this goes, and we'll keep everybody posted on progress that you make. So thank you, Adam.
Thank you.
We'll turn it over next to Frismo.
Hi, my name is Philip Holmes. I'm the CEO and co-founder of Frismo. More importantly, I'm a parent of 4 children that attend public schools. I'm passionate about solving a problem that's getting worse every year. Funding for schools continue to decrease, and in most states, poor school districts get less funding. Schools are trying to fill in those financial gaps and provide the resources they need for their students through various fundraising efforts, and they are falling short. As a parent, nothing makes you cringe more than your kid coming home with a popcorn sale brochure and having to go ask friends and family to buy something they don't want. People care about the mission of making sure schools are properly funded. They care about the kids in their community being educated because it creates a stronger community. What they need is a more simple and transparent way to give back and support at a level they're comfortable with. Frismo relies on a model where we connect stakeholders together. We connect the schools with the families in the community and the community banks through one platform. All the participants will be able to give back to their school with every purchase made. For families that participate, there are several benefits. Establish that value you give your kids of giving back to support your local school. And you can teach them financial literacy because the app allows them to earn, save, spend, and give back in a responsible way. For banks that participate, the benefits include educating a community on financial literacy, cultivating quality member relationships, increasing membership and deposits. Frismo helps schools increase funding support and refocus people's time on school improvements. Schools need a sustainable solution they can trust. Introducing Frismo. Frismo promises to build a financially responsible community while offering the resources to help fund their education. Frismo has developed a banking app and a debit card with a roundup feature on purchases, while the roundup change goes to support local schools. Frismo direct competitors are Amazon Smile, Kroger Rewards, Box Tops, Popcorn Drives, and services similar to Greenlight debit card for kids. There are apps that provide some level of financial literacy benefits and some that give back to the community. However, Frismo does both. The key benefits of using Frismo over the competitors are financial literacy education, budget management, convenient to use anywhere and anytime, that's widely accepted, safe for kids' use, and so much more. The total addressable market is about $1.3 billion. However, Frismo will focus on families with children between the ages of 6 and 17 years old. This yields a target market of roughly $161.8 million. What is Frismo's revenue share model? The first model is with our sponsor bank, where a percent of the interchange is shared with Frismo. Second, with our credit union partners, there's an activation fee and a monthly fee for service. And last, the roundup money goes to local schools and is deposited quarterly. Frismo's go-to-market strategy includes targeting credit unions in Michigan to structure a service deal, work with sponsored bank to connect directly with customers across the U.S., and then partner with schools directly to promote the app as their fundraising initiative. Frismo's traction to date, it includes receiving a small company innovation grant for $80,000. We secured our first customer, Centennial Middle School, back in February. And then BankJoy partnership allows us to create a distribution amongst credit unions given their white labeled banking platform. And then we've been able to add 3 technical co-founders to the team. And last but not least, we've been accepted to Falls Fintech. The Frismo's team has over 72 years of experience building apps and starting businesses. Myself, CEO and co-founder, over 16 years of project management experience. Antoine Bennett, the CTO, co-founder, 20 years of senior IT professional experience. Elton Branch, he's a co-founder, over 16 years of front-end development. And then Greg Womack, co-founder, over 20 years of full-stack development. Join the community and let's change the world together and invest in a brighter education. Thank you.
Okay, Phil Holmes, welcome to Falls Fintech, straight out of Detroit. Woo-hoo. Represent.
Yeah.
So glad you're here. We just heard from your pitch video about what Frismo's doing. The first thing that pops into my mind that I'm sure our audience is going to want to know is what inspired the name Frismo?
Oh, that is a great question. Frismo actually came out of 100 name ideas that we came up with. We went around the neighborhood and actually talked to every child about what name did you like, and Frismo actually won. But Frismo basically is a lettuce. So every kid needs lettuce, right? And the word Frismo just kind of rolls very, very great off your tongue. So
yeah. I love it.
Yeah.
I love that every kid needs lettuce and every kid needs to learn about money. So well done. Talk about what inspired Frismo to come to be, because you founded a few companies before. Mm-hmm. This is not your first rodeo. So talk about where you got to with Frismo. Why did you decide to tackle this problem?
Mm-hmm. Well, yeah, I'm a father of 4 kids. So the problem really stemmed from an in-house problem that we had. Trying to pay kids for doing tasks or chores or doing things around the house was very hard with us going in cashless society. So we said, hey, why don't we create a Cash App or a Venmo for kids? And then we added another component because me coming from an urban city school, we said, hey, funding right now for school districts are at an all-time low. So why don't we add a social cause aspect where we can actually give back and support the communities? So basically, Frismo started off as a Cash App for kids. But now there's an aspect where you can actually round the funds back up to the nearest dollar, and then those funds are then donated to the local schools. So we really wanted to create basically a social cause platform that also allowed kids to benefit from it as well.
So you've always told me that Frismo is mission first, mm-hmm. right? So besides some of those things that have been near and dear to you, what else is the social good behind this? Talk about the, especially when there's racial inequities in certain inner city schools, mm-hmm. What are you hoping to accomplish financially for some of these schools?
Mm-hmm. So coming from the urban city schools, I'm super passionate about the quality of education that we offer our students. Now I've recently moved to the suburbs and I can kind of see how they train, the materials that they have, the quality of education that they provide their students. And I think that should be pretty much common across all schools. So my focal point is to basically even the playing field. I know they have the PTOs, the PTAs that help schools fundraise for money. Schools fundraise fundraise for schools. But I want to help that process. I think the benefit of the PTOs is not necessarily to only fundraise, but also help students, right, in terms of mentorship and et cetera. So I want to help them achieve those goals a lot faster. So my focal point, my mission in life, my passion is to really give back to a community that I came from.
Yeah.
So.
Thank you.
Yeah.
And your secret sauce, one of the things that was really inspiring to me is I always think about this market can be super hard to tap into, but you're already connected to how many schools throughout the United States in a database? You've got that plugged into your Frismo backend, yeah?
Yep. So there's roughly about 94,000 public schools in the U.S. So that's not even including private schools, which also they fundraise as well. So yeah, we've been fortunate enough to have our first school, Centennial Middle School, who's actually going to be working with us this fall. We're going to be piloting Frismo with them, so we're super excited. But no, we think that we're solving a need that schools have, and we really want to help them succeed in that fashion. So
Yeah.
yeah.
So I think the last question, Phil, is around Greenlight, Step, some of those others that you might consider competitors. Tell us what makes you different.
Yeah, although I love the Greenlight debit card for kids, Step, you have Go Henry out there, and they do a great job of providing a financial literacy tool for young kids, teens and tweens. However, our added benefit is adding the component where we actually help schools fundraise. So, some other competitors that we have in the market would be the Amazon Smiles, Box Tops, right? Popcorn Drives. So they do that very well. And what we are is a combination of both. We help schools fundraise as well as teach or educate students in terms of financial literacy. So, yeah.
You talked about that at our pub pitch event yesterday about everybody knows what it's like to get those dreaded popcorn order forms that come home. And it's like, what do I got to buy so that my kids get some funding at school? So I think this is a very unique way to tackle that. And man, again, I've talked about it a few times already today, but our application pool is really competitive. And we just fell in love with your attitude, your spirit, your mission, your focus. And as you know, and for the rest of the audience, Frismo fits the position that we held really sacred and close to us. That is solving financial literacy issues. We put 1 out of our 5 positions for this cohort to be filled by a company that financial literacy solution is deeply embedded in their organization, who they are, what they're doing, and especially those in inner city or minority communities. And Philip hits on both of those. So thank you. Congrats. Super excited for these next 12 weeks.
Thank you. Thank you for having me. And super excited to establish relationships with the Falls Fintech team. So awesome.
And next we're going to take a look at Paper Plane.
Hi, everyone. I'm Cam. This is Austin, and we are the co-presidents and co-CEOs of Paper Plane Financial. And we're so excited to be sharing just a little bit of what we've been doing with all of you. So like Cam said, we are Paper Plane, black and white, simple, efficient, and able to fly wherever the wind takes us. So our idea starts with the idea of the student loan crisis. And everyone knows we have a crisis, but not many people know the scope of how it's affecting us today. There's almost $2 trillion in outstanding debt among 45 million graduates with debt in the United States. And default rates are expected to hit 40% in the next 5 years. So we asked ourselves, why is this happening? And the first reason is completion. They're leaving college with debt, but no degree, and then obviously won't be able to pay off their obligations. The second is cost. Tuition's rising faster than inflation. And with these rising tuition costs, students are having to take on even more debt. The last is repayment. Once students leave college, they're unable to repay massive principal balances, high interest rates, and confusing terms and fees. And that brings us to the idea of an income share agreement. In its rawest form, an income share agreement is a contract between a student and investor in which the investor fronts money necessary for the student's tuition in exchange for a percentage of their future income as equity. And there are a few basic terms about income share agreements that you need to know. The first is a funding amount, which is comparable to a principal balance, the amount that a student needs to take out to finish their education. The second is an income share, which is the monthly percentage of income that a student is expected to repay. And the third is a payment term, which serves as the life of the obligation between 5 and 10 years. There's also a minimum income threshold, which is the minimum under which students have to pay back nothing. There's also a payback cap, which is 3 times the original investment. If a student hits this cap early, they're finished with the contract. There's no principal, no interest, and no disbursement fees. And that brings us to Paper Plane and our company. We at Paper Plane believe that risk should be dispersed among incentivized parties in the space. And as a platform, we aim to connect these institutions, including our investors looking for attractive returns, schools looking to have skin in the game and invest in their own students via endowment funds, and our partners. These can be in career services, product analytics, and contract servicing, among others. Paperplane as a platform attempts to vertically integrate the loan system of origination, capital markets, and servicing, acting as a one-stop shop for all students' needs, bringing investors, schools, partners, and students to the same table.
And so that kind of brings us to our model and what we're doing on a student by student basis. And essentially, this is a two-pronged approach. First, we want to predict the income a student is going to make out of college so that we can accurately price their contract. And we're doing this with predictive income modeling techniques. We take into account student factors from publicly available data, such as their major, their degree, their university, and their GPA, among other things, in order to create a holistic picture of who the student is and how much we believe that they are going to make out of college. Then it goes over to the financial side of things, where we take into account economic variables such as labor force participation rates, continuing education rates of students, salary growth of employees, and the unemployment rate as a whole. And essentially, what these two prongs do for us is it boils down to two terms. This is the percentage salary cut that we will be taking from a student per month for the lifetime of their obligation, and also the percent returns per year so that we can give an investor an accurate picture of what they might expect from our fund and our portfolio. And so essentially we had to ask ourselves, we know that this solves a pressing need for students, but how does this appeal to investors? First, we believe that diversification is a big factor for any institutional investor. Education is a relatively uncorrelated asset class to many others, and on the basis of that alone, we believe that this should be an attractive investment. It's also inflation protected with the salary growth of employees, unlike many other investments in other spaces. Third, and most importantly, we believe that this can provide a social good opportunity to investors. We know that this is a better product for students, and it offers financial flexibility and debt alleviation. Finally, we believe that there are infinite opportunities for scaling, that there is in every university at least one student that needs our product. And so this is the team that we've been attacking this problem with, along with myself and Austin. We have David Kaufman, our Chief Operating Officer, who may be the single smartest person that either of us know. We have Santiago Lejeune, who's our CFO. He is currently stationed in Belgium and so could not be with us today. And we also have Josh Medway, a part of the original founding team and now our Chief Digital Officer. Positioned as Duke students, we believe that our five-man team is truly the best one to attack this problem. We believe that if the solution to this crisis was found on the backs of Harvard MBA students with 10 years of experience in financial services, there would already be a successful company in this space. There is not, and that is what we aim to be, the solution to the student loan crisis.
Thank you for listening, and we're excited to meet you all this week.
Sweet. Great video. I'm here with Austin and Cam. Welcome to Falls Fintech, guys. Straight out of Duke University in Durham. What? So glad you guys are here. And the first question that I want to ask you guys, college students, you're from New Jersey, you're from PA, you go to school at Duke. When we said, hey, you've been accepted into Falls Fintech, come on up to Sioux Falls, South Dakota, what was your initial reaction?
You know what, Nikki, I think we said, where at first, but really what we looked at it as opportunities comes in all shape and sizes. They come from every direction, and we're just following wherever that takes us. Yeah. Well, extremely grateful. You guys in the last few days have done a great job. We had our pub pitch yesterday. This is, of course, our kickoff. When we looked at applications for this cohort, nobody else is working on income share agreements or anything that solves certain problems in that pain point. It's not necessarily emerging fully being a new vertical, but similar or a little bit in the financial education space. So talk a bit about your experience as college students and why this is so near and dear to your heart, and what's the genesis of the idea? Sure, Nick, I'll kick it off and hand it over to Cam. I mean, I think we're uniquely positioned as college students in this world we've come to see the beginning of the industry, just the budding of income share agreements in the market. We've come to see companies that have started in the past 4 or 5 years. But really what we're doing here is we're using our unique position as students and as people who've watched this market for the past 2 years to say, okay, we've learned from the past and we're going to innovate for the future based on their mistakes and also what they're doing well as well.
Yeah, and I think it's interesting. I mean, we're immersed in this problem for 9 months a year. We're talking to students day in and day out. And I mean, we're looking to pilot our program in the Research Triangle, which is Duke, UNC, and NC State. And I just think like Austin said, we're in a unique position where we talk to students every day that have these problems. And it truly is a budding market. And we think we're the most uniquely positioned to bring this product to market.
Yeah, I love it. Talk a little bit about, I was impressed with your pre-work before even the accelerator around the CFPB and speaking with and looking for their guidance straight away. I've seen a lot of fintechs that'll say, I've got the best idea out there, I'm going to go build something and not contemplate legal ramifications or any kind of regulatory framework. And I know there's lots of work to be done, but you guys started there, which is really cool.
Absolutely. I mean, the regulatory structure for income share agreements as it stands right now is extremely thin. I mean, nobody really knows what this product is. The other companies in the space make sure to have big declarations on their income share agreements. This is not a credit, this is not a loan, but that doesn't necessarily exempt them from the laws of the day. And we don't really know what applies to us as of yet. So like you said, I mean, we're just doing all of our necessary research to figure out how can we be compliant with the most things possible. And like you said, just looking into the CFPB and the recently drafted legislation like the Consumer or the ISA Student Protection Act of 2019, that's hopefully going to be re-examined in the coming years after the COVID situation dies down a little bit. Just looking into that and making sure that we're compliant with all those things so that when we are ready to go to market with this relatively new product, we don't face problems down the road. Austin, I didn't know if you wanted to add on to that, but
yeah. Regulation in this market's absolutely necessary, and it's coming in the next couple of years, and we're just trying to be prepared for it.
Yeah, I love it. COVID, great transition into the next question. So COVID's impacting schools everywhere. Your target audience is college students in grad school, yeah?
That's right.
Yeah, so that's your kickoff market. What and how do you think COVID is doing to that market, to that industry, and how is Paper Plane prepared to play in this pandemic space when we really don't know what the end looks like?
Sure, Nikki. Well, when we started this company, we decided to view COVID as an opportunity instead of a setback for us. And so I think we've built the company with that vision. And one thing we've been thinking about is that in this environment, our direct competitors are these large lending institutions. And the lending environment right now is a tough one. And so they're looking for alternatives. They're looking for new opportunities and new products. And so I think that's where we come in, and that's what we're trying to do. We understand that the market may not be the perfect opportunity for new products, but we think that we're going to come out on the other side prepared and ready for the future.
Yeah, and to add on to that, we actually think something like COVID is going to provide a huge demand spike for us. I mean, we're talking about a product that provides financial flexibility and protection for students for years to come. Student loans require a monthly payment of X amount of dollars, depending on your principal and your interest rate, every single month, no matter if you have a job, if you don't have a job, if something's going on in your life. The main point of our product is it truly is an insurance product. That's how we built it, where if you're not making any money, you're safe. You're not paying anything. It's not recapitalizing on your original principal balance. You're not losing out on anything. And so that we actually believe we're uniquely positioned with the COVID scenario that people will want this product more, because if something like this were to ever happen again, this provides them the financial flexibility to be able to survive that kind of an event.
You bet. And when is launch?
That's a great question. I mean, we're trying to dot all our T's and cross all our T's and dot all our I's. As you said, we're examining the regulatory landscape, trying to figure out how we can direct our legal team to create the contract necessary. We have the model ready to go, so we know that we can price these contracts. And the last step, and the reason why we're here at Falls Fintech, is to learn about the banking and payment space and really just make sure that the integration is fluid so that we can start raising money and hopefully get to market next year when the environment's right. So I don't know if you wanted to add on to that, but yeah.
Sure. Yeah, we're looking at next fall is our ideal target date. Obviously, it depends on market conditions. We're going to go through another round of the government recalibrating loan rates as well. And so There are definitely some ifs still, but we are targeting next fall as launch time.
Love it. We're so excited and looking forward to setting you guys up with the right mentors, the right curriculum, and the right kind of framework to get you to be able to hit that date. So thank you, Paper Plane. So glad you guys are here, and looking forward to what's next.
Absolutely. Thank you, Nikki. We're thrilled to be here.
Boom. So next we're going to kick it over to, who do I have? I've got RiffPay.
Introducing RiffPay. Social banking made for your friends, family, and more. Banking for the new generation. Combine social interaction with finance.
There are hundreds of P2P products out there in the market, yet Americans still lose $184 billion annually in reimbursements and repayments. On top of that, less than 50% of people pay back the money they borrowed from friends and family. Why? The problem is that banking is currently tailored around the individual, leaving groups with limited options. When I was in college, I lived with 3 other roommates. Every month, we had to pay for bills and rent. Current solutions in the market did not provide a fair or efficient way to make these payments. How did we do it? One person would pay the full amount of the bill, then ask the others to pay them back. That one person just incurred the full cost of the payment, while the others were not involved at all. This brought up a lot of problems between us. One month I paid the electricity bill, but I had other bills coming up, like my personal subscriptions and even my portion of the rent. I would have to chase down my roommates to get my money back, sometimes even blowing up their phones until it happened. That's when we told ourselves, there has to be a better way to pay as a group. But it wasn't just us. All of our friends faced the same issue. Our focus is on college students and the younger generation. Gen Z, or those born after 1995, are the largest generation to date. They comprise almost 30% of the US population, which is around 90 million people. Who knows the problem better than the people that face it every day? Hi, my name is Hafiz Abdurrahim. I am the co-founder and CEO of RiffPay. We are building a group banking platform that allows users to share, spend, and save money together. Whether it's friends splitting an Airbnb or a fraternity collecting money for a party, we are dedicated to providing the best banking solution for groups of people. As part of the new generation, we at RiffPay have directly experienced how underrepresented we are within the banking and finance industry. We also know that we crave social interaction and actively seek it out. More than not, those interactions involve spending money with multiple individuals. When people come together for social interaction, money is usually the last thing on their mind. The point of spending money together on an experience isn't the cost of the experience itself. The point is to come together in a group and bond through shared fun. The solution is simple. By giving people the ability to pay with each other and split payments in real time, they will never have to spend more than they have to. Everyone pays their fair share, so no one is left hanging. By shifting the focus from individuals to groups, we allow people to keep having fun while not worrying about who paid what. Don't pay for your friends, pay with them. RiffPay is well positioned at the nexus of 2 large and growing markets. The first of these is the P2P payment market. It is currently valued at $396 billion and expected to reach $3.2 trillion by 2024. The second one is the neo and challenger bank market. It was valued at $18.6 billion in 2018 and is projected to reach $578 billion by 2027. Our primary opportunity is in disrupting traditional notions about monolithic ownership, allowing the concept that underpins the sharing community, sharing itself, to be the basis for financial self-identity. According to the FDIC, there are at least 24.2 million households in the US that are currently underbanked. RiffPay offers important banking services to these users in a shared mobile model. Total mobile user base in the USA is 224.3 million connected users, providing a wide and deep market for improved mobile banking and financial services. Circles are group accounts where you can share, spend, and save money together. Track your group spending in one place, communicate your upcoming expenses in the group chat, and use your Circle card to pay anywhere. With bill pay included in your Circle, you can split the cost of anything, from an electricity bill to a music subscription. We make splitting bills easy and frictionless. What if you don't have a group you spend money with? What if you don't want to put money into an account with your friends or family? Instant splitting is a revolutionary feature that has never been done before. Search for users around you, add them to a transaction, and split the cost equally in real time, which makes it quick and easy to share one-time payments without having to create a circle. The potential is huge, and we welcome anyone who wants to work with a young and hungry team and shares our passion and vision for the future of banking and social payments. Thank you for your time, and I hope to hear from you soon.
All right. Thank you guys so much. I'm here with Hafiz and Bryce, co-founders of Rift Pay. Congratulations on your acceptance into Falls Fintech. We're so glad you guys are here, straight out of Dallas, Texas. What? Represent. So glad you guys are here. So Rift Pay, your video was great. Talked a lot about what you guys are up to, what's unique about your value prop and split payments and group payments and things like that. A few folks, including on our advisory board, first question that popped out in their head was, what if Venmo decides to start doing this? What makes you unique to win the market in that way?
Definitely. And really for us, we look at Venmo too as a competitor, right? They're in the P2P space, and they were really the first people in that space. But their focus is really on the individual, not groups. And that's from the start, right? So for us, when we took the start of Rift Pay, we were like, individuals, that's cool. The whole financial industry does that. But with us, we want to focus mainly on groups and really hammer that down and make that our thing. And so circles are really doing that for us, where we're focusing on that as our main feature, and having group spending, group saving, group sharing. That's our main focus, really.
Yeah. Everything's social these days. We got WhatsApp, we've got groups galore on Facebook, and of course, banking, financial services sharing has not been habitually or historically social. So why is the time right in your mind's eye to introduce this, to try and create more circles and people spending and saving together?
So I think right now the huge problem is that the problem that Venmo does not solve is that you still have to pay for people, right? You still have to pay for your friends, you have to pay for bills and then get paid back. That doesn't solve the main problem of someone supposed to spend that money and not get paid back. So Bryce, you want to add to that?
Yeah. So I think also just increase of people using technology, especially social media, growing bigger and bigger. People are wanting to do things with groups of people. They want to do things together. They want to spend their money together. But with our generation especially, we're very much burdened by student loans and other situations where we don't have a lot of money to cover people. So how do we go and spend money? How do we go and do things together that does require money? And that's kind of where we come in, where Venmo and Cash App don't really solve the problem for. And so I think what makes it a great opportunity for us right now is that, especially with COVID, everyone's looking to split subscriptions, Netflix, Hulu. They're trying to pass the time, but they don't want to spend it all by themselves, and they don't want to pay for everyone by themselves. They want to pay for it together. So I think that's what brings this opportunity to us in a really golden light.
Yeah, appreciate that. The Falls Fintech, you guys were around Cohort 1, didn't quite work out there just simply because of logistics. You came back to Cohort 2, applied again. Why is Falls Fintech so important to Rift Pay?
Yeah, I'll go ahead and start. Just coming from the tech side, it's everything that we need. It's everything that we want and need to have a full platform to really be performant, because we want our platform to be fast, efficient, and simple and easy to use. And with a lot of providers, they don't provide everything we need to encompass all of our features and make it simple for people to use. A lot of people would have to wait for a lot of things because we don't have push and pull card functionality. And so technology is really one of my biggest things. What do you think, Hafiz?
So I'd say from the business side, really as a recent college graduate going to the banking space, the fintech space, it's tough. The barrier of entry is really high, and getting that knowledge under your belt without having a banking job or a banking career is tough. So this really gives us the opportunity to learn both on the tech side and the business side, where we can really exceed and push our limits and be better.
So RiftPay was one of 3 companies that were trying to solve well split payments, real time groups, things like that. You guys quickly rose to the top for us for a number of reasons. There's always this tug and pull between who's got the best scale and who's got a better idea, who's got unique niches. And then, of course, the founding team. You guys are just great people, humble, kind, hungry, hustling, all of those things. And so we just really appreciate that. We can't wait to see what happens. I know you've had some big wins as of late. Talk about some of your highlights in the last couple months.
Yeah, definitely. So we raised a pre-seed round originally of $130,000. So that's been funding us the whole time. And we're about to launch our live product in the next 2 weeks. So we're using that mainly for testing purposes before we build with OpenCP. And we're just so excited. Yeah, so
that's great. So the last thing is, Bryce, what do you got to say?
Well, at the end of the day, we're representing Dallas, Texas. We want everyone to be on our platform. So essentially, please join our waitlist online and let's go!
Oh, I love it. Thank you, RiffPay. Next, we're going to kick it over to our video by Donald Hawkins with 10th.
Hello, everyone. Thanks so much for your time. My name is Donald Hawkins. I'm the co-founder and CEO of 10th. Those 8 minutes and 46 seconds on March 25th is a day that opened up a lot of eyes in America. For some people, it was the pandemic forcing them to stay home and not be able to get back to regular life. But for me, it was having a pregnant wife and with a son due any moment now. It caused me to think about the plight of Black America with a more entrepreneurial mindset. The Black community fights so many systemic causes and issues in this country. And for decades, we've had no real active solutions for the root cause. Everything from police brutality, voter suppression, you name it, we're fighting it. And it led me to one simple thought, that in the United States, money is power. And of all the communities in the U.S., due to systemic reasons, Black America is also the most financially illiterate. We're afraid of money because we haven't been taught how it works. What's a CD? How are prime rates established? All things that I didn't learn until my mid to late 20s. Money permeates every single thing the Black community fights for in this country. You don't believe me? Let's look at the numbers. Education reform has been a hot topic for a long, long time. On average, school systems with 90% or more students of color spend $733 less per year on each student. This results in reduced graduation rates, less qualified teachers, lower test scores, causing Black students to rely more on student loans, and the list goes on. Housing reform is another significant point of focus for Black America. I lived in Kansas City and recently found out that redlining was actually originated here. From a very young age, I was told that home ownership is how I'm going to build wealth. But what I wasn't told is that there would be a $153,000 gap in median net worth between Black families and white families, or that it takes Black families twice as long to save their 20% down payment to purchase a home, or that homes in Black neighborhoods are valued at roughly half the price of white neighborhoods. Let's move to homelessness. With the poverty threshold in the United States at $26,200 and the mean income for Black families at $59,000, Black families are largely always one job, one paycheck away from being in poverty. And this is something that a lot of Black people are just accustomed to living with as well. Now that I've hopefully established the importance of money in regard to systemic issues, let's focus on the role banks play in it. For reasons that I'm sure I don't have to explain here, Black America doesn't trust banks. Can you blame us? The number one line of revenue for the largest banks in the U.S. is overdraft fees, and there are 39% fewer financial institutions in Black neighborhoods. On top of that, we pay $245 more just to earn free checking accounts. And I'm sure I've provided enough stats to last everyone a lifetime, but there's one more stat that I want to make sure people are aware of that shows how critical it is to move now. That is, in 2053, just 33 years from now, the median wealth of Black families in this country will fall to $0. We're the only community in America that's going the opposite way. And 10th is doing its part to fix it. We're a combo personal finance management app and neobank. This combination helps us truly empower our users to take control of their money and reach retirement financially sound. This combination also helps us develop relationships with a larger swath of members while helping them get their existing accounts and finances under control. On the neobank side of things, we're launching with a full deposit account with specific features that we know will help our members thrive, like peer-to-peer payments, early direct deposit, merchant-funded offers, and much more. Now, don't get me wrong, systemic racism sucks, but the Black community is resilient and we'll always find a way to win. Collectively, we spend $1.2 trillion each year, and over half of our community banks exclusively via mobile, which is pretty good considering we're a neobank. We're also America's most viral market for those entities and organizations interested in reaching us with realistic solutions. Though we're less than 5 months old, we're mission driven and we're meant to be doing exactly what we're doing. Through mission aligned and niche distribution partnerships, we've amassed over 28,000 waitlist users, and we've also been able to secure a sponsor bank. Typically takes neobanks 15 to 24 months to do that, so we're pretty excited about that. And most importantly, we're launching day one with a deposit account that provides all the options our members need. We believe that every consumer in America needs the ability to retire safely and financially sound. We look forward to working with Falls Fintech and all of the stakeholders to do just that. Thank you all so much for your time.
Well, hey, Donald Hawkins, so good to see you again. And we just got done watching your pitch video. Thanks so much. What a wonderful story you told through that. Glad to have you with Falls Fintech. I know that you would love to be with us here in person in Sioux Falls, but you've got a baby due this week, any day, yeah?
Any day now.
Well, congratulations on that. And again, another successful startup. Super excited to have you here. You know, you and I had previously talked about 10th and your vision. I think your deck did a wonderful job explaining more about what you're looking to accomplish. But more than that, tell me why this and why now?
Yeah, thanks so much, Nikki, and super excited to be a part of this program. It is very apparent to me that something has to be done to help the Black community right some wrongs. You know, we're all about allies and people willing to get in the trenches and fight with us, but recognize also that movements tend to work better when the people that have been oppressed, you know, start to try to solve some of their own problems. And one of the largest stats that you guys saw me reference not too long ago was that, you know, by 2053, the median net income for Black families in this country being zero. I mean, that is a significant stat, you know, and that's not that far off from now. That's only about 30 years as well. So if something does not get done now to help break generational curses, I mean, we have centuries of examples of people being able to learn the behaviors that they have and experiences that they have. If we now want to help the Black community take control of their money, there has to be just as hard of a shift to help people find out and learn effective ways to do that. So something that, you know, I was definitely led to. I think what happened in Minneapolis woke a lot of us up as well, me especially. And recognize that, you know, I've been provided some gifts, skills, and talents that if I did not utilize to benefit others, I would regret it for the rest of my life.
Man, really cool, really inspiring. You know, for this particular Falls Fintech cohort, we're so blessed to have you all join us as our very first entrepreneur in resident. Which basically means that you're going to help peer mentor some of these folks. You've gone the journey before with Griffin Technologies. You're a bit farther along and more experienced. But tell us why it's important for you, or why did you say yes to this opportunity to be EIR this cohort?
You know, lots of different reasons, right? You know, the cool thing about the fintech industry is it's a very small industry and it's very incestuous, right? That there's a lot of companies that I recognize we can partner with through our platform. One neat thing about 10th is that we recognize we always have the ability to partner with other companies that have APIs and other offerings where they are specialists, you know, in those specific areas. Our job is to bridge our user base to those companies. Being able to learn from the other stakeholders that are part of CBKC and Central Payments is something that definitely stood out. But I also get invigorated and already have been invigorated by the talent, you know, of the youth that are in the program. The lens that they have, the way they see things, honestly helps me think about things differently. I feel that as an entrepreneur, I'm pretty innovative, but from some of the other ideas and concepts and companies you guys have heard today, clearly you can see I'm among like-minded people and maybe even more innovative people as well. So it's refreshing to be a part, of the future of fintech, and anything that I and my co-founder can do to help them avoid steps and see around corners is something that we're willing to do, because we've been very fortunate to have people do the same for us.
Yeah, great. All right, so last question, and maybe the heaviest of all. 10th is so mission focused, missional as an organization. What in your mind does success look like when you think about 10th?
So great question. And you're right, it is heavy. There are a lot of people in this country that live day to day with a lot of weight, on their of things that they would like to happen, but also internally fighting their own belief that they can actually go out and achieve the things that they want. We teach our kids that you can be anything you want to be, but then we also don't sometimes recognize all of the barriers that these kids in a lot of cases face alone, that they may not feel comfortable talking about as well. So when you think about the concept of what the American dream is, it's different typically from community to community, and it breaks my heart. I've been very fortunate, to be the son of a man who was the first Black person to integrate his high school. My grandmother grew up as a sharecropper, but they worked their butts off, and my sisters and I were able to do things that they couldn't even imagine. And that now falls on me, and it's my job to do the best that I can to help the next generation realize that they can do exactly what they want to do. And one of those major steps is to help as many people as possible get over their money and to actually control it, and to think of more effective ways to build wealth. It makes no sense that we live in a country as great as the United States and have a wealth gap, as large as $153,000 between white families and Black families. It just doesn't make sense at all. And considering that Black community and Black families as well are actually moving the opposite direction, like the average income is going down for most households as well. And either we could sit back and wait for somebody else, to do something, but then it kind of dawned on me, Donald, you're in 2020, bro. If something hasn't been done by now, it likely is a reason for that. So I hope that it wakes up a lot of people. I'm super excited for the next generation of entrepreneurs and the things that they're going to develop. And if I can just be a catalyst for the next, swath of ideas entering the market, then I would have done my job. But we 100% want to eradicate the wealth gap. It's going to be a lot of work, and really glad that you guys are along for the journey.
Yeah. Well, thank you so much. I once heard a song that says, "If not us, then who?" And that's a line that's always stuck out to me. And you're the us, you're the who right now. And so I'm super inspired by that as always. And man, it's gonna be a fun ride, and grateful that you're part of it.
I was really hoping you were gonna sing it, Nikki.
Oh nope. There will be nobody wants to hear that. Nobody wants to hear that. All right, buddy. It's such a pleasure, and appreciate the summary, appreciate the time, and really looking forward to the next few weeks.
Awesome. Thanks so much, guys.
Take care. Well, hey, thank you guys so much again for joining us. As you can see, we've been real busy in the last couple days. We welcomed these companies to Sioux Falls on Monday. Today is Wednesday, and we've done a lot so far. So thank you, everybody out there, for your support. Once again, sponsors, couldn't do this without you. Really grateful for everybody, investors, supporters, friends, colleagues, fintech companies. Just keep cheering these guys on. Follow them on LinkedIn, Twitter. All their pages and contact information will be shown on this next slide. And of course, Falls Fintech. Follow us, and we'll show you what they're up to over the next 12 weeks.